We welcome you to our classes. Today's topic would be double entry book. Before we move on to the subject, first let us look at a question which reads as the double entry system of bookkeeping normally results in which of the following balances on the ledger account? Debit balance column and credit balance are given. A. Assets and revenue debit, liabilities capital and expenses credit. B. Revenue, capital and liabilities debit, assets and expenses credit. C. Assets and expenses debit, liabilities, capital and revenue credit. D. Assets, expenses and capital debit, liabilities and revenue credit. Which of these statement is correct? We will have to choose one. Let's look at the lessons. Basic principle of double entry bookkeeping is that there are always two entries to every transaction. One entry is known as debit entry, the other entry is known as credit entry. Debit is written to the left, credit onto the right in T accounts. Every debit must have a corresponding credit. Similarly, every credit entry will have equal corresponding debit entry. So for every entry there are two sides. In every transaction there is dual aspects. That is to say, two aspects are there. Debit we usually call is the receiver of the benefit. Credit we call it giver of the benefit. Next, if double entry has been carried out properly, the sum of debit entries always equal the sum of credit entries, which we can test it by trial balances. Often spoken T accounts are shown here. 3 accounts are shown here. Even though these are very useful and mostly used in classrooms, but in practical life, this is the one which is shown mostly, which are columnar accounts, column accounts. This is the format you will see in computerized accounts as well. In order to understand double entries clearly, thoroughly, and more emphatically, students should be familiar with the golden rules of double entry, which are shown here. These rules don't change and it is applicable under all circumstances. Assets and expenses will always have debit balances. Similarly, liabilities, equity and revenue will have credit balances. As you see, in order to increase the balance of an asset, it has to be debited. To decrease it, it has to be credited. Similarly, expenses to increase debit, to decrease credit. Same way with liabilities, to increase it should be credit, decrease debit. Equity, increase credit, decrease debit. Revenue, increase credit, decrease debit. This should be always in the minds of the students. Now let's go to the question. In A, assets and revenue is shown as debit balance. Revenue cannot be a debit balance, therefore the statement is incorrect. In B, revenue, capital, liabilities. All these three cannot be debit balance, therefore this statement is also incorrect. In C, assets and expenses are shown as debit balance, which is correct. If you see the other part of it, liabilities, capital, revenue shown as credit balance, which is correct. Therefore, the answer is C. Dear students, we have attached a flashcard just for you all to revise the lessons we learned today. These classes are provided to you by our YouTube channel SL Account School. We kindly request you to subscribe, share, like, and also inform your other fellow students and those who are interested. Thank you very much.